Okay, guys. Welcome to today's video. So, very quickly, we were talking about the role of what displacement, right, in SMC entries. Okay, so they are kind of a market reaction that you would see, right? Remember, in SMC, we do not just trade, we don't gamble, right? We react according to the way the market reacts. Okay, so it means there would be a specific market movement or a specific way market will react, then we'll be very very interested in that reaction. Why? Because of the way market reacted, we'll be so interested in those particular area. And one of these important movements we want to see as an SMC trader for an SMC setup is a displacement move, right? So we're talking about that movement, displacement. So a displacement simply means where there is a strong impulsive move in price, right? Where market would make an impulsive move in price, either to the upside or to the downside. You just see an impulsive move, right, with the strong candles, and of course, the impulsive move comprises of an imbalance where you just see a candlestick just make a massive move to the upside or to the downside. That is called a displacement. So when market makes that strong impulsive move, it's called a displacement, right? Now a displacement shows that there is institutional what involvement or commitment in that particular area. It means that particular area is a point of interest for you because institution, for market to just pump or dump all of a sudden from a particular zone with massive candles, right? Volume confirmation is there. You check your volume, market is also increasing in volume side. What it means is that there are what real institutional commitment around that area. So there's an activity for smart money is there. Okay, smart money is actually there. So these are the areas we want to actually focus. Remember, I used to say you cannot catch every move in the market. You are not supposed to catch every move. Once you trade, you get an entry, you wait for the setup, it triggers, you're out, right? It triggers in profit or in loss, you're out. You don't want to wait for be catching every move. At the market is moving, you want to catch every move. No, 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 no. You don't want to do that. You end up over trading, right, on that particular trading pair. Okay, so I'm going to take us to the chart so that we'll see what I'm talking about. Then we'll know how to identify impulsive moves where there is displacement. These are where SMC traders are interested in. We don't just want to buy off any zones in the market. We want to buy off where there are displacement. So it helps us get precise area of look where we will now be putting our eyes off as a point of interest in the market, right? And of course, as usual, higher time frame perspectives are very very important. Higher time frame perspective. If you notice on this time frame, this is AVUSDT. Let's look at how the market has been doing on higher time frame. You see that okay, market was in a clear downtrend, then all of a sudden market changed um, bullishly to an uptrend, right? This particular trend line that has been breaking structure to the downside has been taken out, right? This was where market was bearish. If you look at all this region at this area, market was actually bullish, making movements to the upside, right? From this area, market was buying in a range, slow manner, but market was actually bullish to the upside. Now if you want to know where price is likely going to continue the movement from, okay, you want to enter the market, you want to trade off the market again, all you need to focus your eyes on are what displacements, area where there were impulsive moves in the market. And a displacement move should have a bullish candle or a bearish candle with an imbalance there, and that imbalance should create a break of structure either to the upside or to the downside. Okay, so those are the characteristics you need to see. So it's just like a footprint for our eyes anytime we come to the chart. That is, after looking for, you know, the direction. Okay, market's in an uptrend. Now I want to catch a buy trade. Are you just going to buy off from any region? So you go to higher time frames like the daily and the 4 hours. That's what you want. That's where you want to look for those displacement move from, right? The daily and the 4 hours to identify those moves. If we are going to backtest these displacement moves now based on this chart, you would see how market has been reacting. Okay, you wake up in the morning and you see this impulsive move, right? Market made a pull up from these regions, right? Made a swing low to a swing high. Where would be your point of interest? That if market is retracing now, making red candles to this side, since you know the structure is bullish and you want to buy according to the market, where are where is your eyes going to be looking at? Your eyes is going to be looking at areas where market actually creates impulsive moves, right? You're going to be looking at areas like this where there are candles making impulsive move to the upside, this candle making impulsive move, this candle making impulsive move. Where the market retraced into? Market retraced into this region where there was an impulsive move from this candle and bought. While market was buying, market made another impulsive move again. Displacement, displacing to the upside with intent to buy strongly. This is the daily time frame, remember. Now market made a retracement to this side, then all of a sudden, boom, he bought all the way from this side, range a little bit, then we saw an impulsive move to the upside. We traced to the lower region, we saw another impulsive move to the upside. Now when market was coming down from this swing low to this swing high, it was very interested in this region. Look at this region, impulsive move. Look at where the market stopped on its retracement. Boom. Just from here, where market created this displacement move. Do you see how to catch trades if you are actually patient enough? Right? If you're actually patient enough. So when we look at the chart and we look at candles, we are interested in areas where price made a what impulsive move, a displacement. We are not interested in where price did not actually create that we are not. As long as we know the structure, we are not. Okay, for example, look at this movement. Even when market shifted structure, because market was bullish, then it started going bearish. Even when it was coming bearish, when there was a massive dump all the way here, market respected where there was an impulsive move, where market displaced buy. It respected this play and there was a sharp rejection, right? But market continued moving down because the structure has shifted based on higher time frame perspective and was now coming down. Now let's look at it during the sell side scenario, right? Important sell side scenario. Now look at the low that gave us this high, could not give us a new high. Market took out this low right here, down, right? So this was where the market structure shift happened, right? So this just like back testing the charts to see it, right? On different, of course, on every kind of chart, on every kind of pair you want to do that, it happens. So this is where you see the major market structure shift. This was the previous low that could not give us a new high. Market ranged a little, then broke to the downside, and you can see the impulsive move, the way it displaced down, right? The way it displaced aggressively to the downside, all the way, boom, right? You can see even when market turned bullishly, right, coming to this same region when there was an aggressive movement. So you need to know how price reacted. The reaction really matters. Now look at when there was an aggressive sell side here. Even though market has changed structure to bullish, market still came here and reacted to the downside. There was still a sell, though the structure is bullish, but this place pulled market down for a retracement. Why? Because of this massive move, right? So if market behaved this way, shifted structure, there is a possibility that market, and of course this is the daily time frame. If someone have traded off this sell, you would have made a lot of money, because this took place how many days? 1 2 3 4 5 6 7 8 9. This like 12 days market was bearish for 12 days. So good opportunities to even look for sells or catch sell trades on lower time frame, right? Now look at when market retraced all the way, we had a range, then all of a sudden, boom, market shifted from here to here. As long as the structure is still bearish, where would our point of interest? So let's say we caught a trade from this region and we short it to this way, we took profit, and market is retracing. If we want to enter for a trade again, where do we look at? Do we just look at any area? Look at where market reacted off. Market is still reacting off that displacement. Market reacted off the displacement and push market down, right? So any region where we do not look, What I mean by focusing on displacement, look at what market did here. If you look at when market was buying here and market was selling here, there was no displacement on all these movements. There was none. So even at this structure, when market decide to tap into higher time frame level here, 50% of this swing high to this swing low, and change structure to the upside, when it came here, there was no displacement. You can see the reaction market acted and took out the structure here. This is where we had the shift of structure to this downside. So displacement moves, by displacement moves I mean impulsive moves, helps you react, so that you are not looking at a zone because of sentiment, or you can say, I don't even look at the price. I don't even look at the price. Oh, if is 149 and it's going to 300, it's going to go to 350. All those ones does not really matter when you are studying price action, or you want to trade off price action. The price, if is at 162, no, it's supposed to go so price. It's supposed to break this price. It's supposed to go below this. Price does not matter. You are looking at price action, right? So I want you guys to actually go to your chart and back test this move. This was a displacement move to the upside, but when price was coming down, it did not even get to this region. It must have gotten to a 50% region. Let's look at this swing. It did not even get okay, got. So this swing low to this swing high, the market was retracing 50%. It got into the discount region. It did not even come to this region before buying to the upside, right? So if I wanted to trade this move, this would have been my point of interest, where this impulsive move happened, right? Would have been a point of interest, but unfortunately market could not even get to that region before shifting structure to the upside, right? If you go to slower time frame, you see the same thing happening. Let's go to 4 hours time frame. You see the same thing, market reacting off displacement zones, right? Off where displacement and impulsive zones, over and over again. You can see displacement zone that market reacted and started buying. This was even good. Let's look at this, right? Look at what happened here. When market shifted structure here, you had a break of structure. Market was coming down, took out this particular channel. A lot of people will call this trend line, but this was a channel move. Took it out, but where did market come to react? Now I'm teaching you this how to backtest. Now when you want to study, this is just how you backtest, to look at how market is reacting. Market reacted off this what? Displacement, impulsive move that happened here, strong buy, and all of a sudden you can see market moving aggressively, wants to target liquidity off this region. And who knows, within few days, because this is a daily chart, within few days it would have targeted this region, right? So you can see, if it's for a pure SMC setup now, this low is protected, it shifts structure, and it took out the previous low right here that created a break of structure. So this region protected, and market also created another break of structure to the upside right here. Market retraced into lower regions of where this impulsive move happened. Then you see a buy. If you go to lower time frame now, you will see a continuation sell. Even if market rejects off this region, what would be my point of interest again? Where there is an impulsive move on this higher time frame. Should price started, say price did not take out this high, and maybe gets to a resistance level somewhere here and decided to trade back down, this would be my point of interest again, to catch off buy, to continue this movement to the upside. This is how price moves. You study the chart over and over again. This is happening in AVE. So role of what's it called, displacement for in SMC, it's important. Why? What is SMC? Smart money concept. We want to follow what? Institutions to buy. If you want to follow institutions to buy or sell, it means you want to identify areas where they bought, and if institutions buy, because of the huge money, market moves up or down drastically. Pump, sell, pump, buy, sell, dump. So it means if they are interested in pumping the market at a particular region, or selling the market with an impulsive move at a particular region, those regions are where you should always be looking at for a trade. So if market is reversing, maybe market is coming down to regions where there are no impulsive move, I'm not really interested in buying off those regions. For example, when market is selling down here, my point of interest would be here. I would not really be interested in catching off trades and this region, right? I would have been waiting for market to come to an impulsive, where market made an impulsive move. There's an imbalance there. I'll be waiting for market to retrace, just the way it did here. So I would have missed entry here, but off this region when market is coming down. Now, what a lot of people would do is look at the way market buy. This is the last point I'll make before dropping out this video. Market made an impulsive move to this upside. Now, a lot of people will be looking on lower time frame now. They would not know when, because of course AV is bullish. Now, because of this region of buy, lots of people will be will be looking for buy setups off all these regions, because on lower time frames you'll be seeing order block, you'll be seeing so many things that you want to buy. Then what, all of a sudden, you can see even when market bought from this place to push it to the upside, market still came back down. So that's how you'll be taking out. Why? All these levels, right? The market did not even create an impulsive move, right? On this higher time frame, there was no impulsive move buy here. Market would buy to fill the gap, to buy to fill the buy. It took so many days to complete this move. So when market is selling, you are not even interested that, oh, markets at this level now. If you now say, oh, I want to draw my swing high, swing low, right? Buy off, look for areas to buy below the 50%. Now, all these areas below the 50% now, there is no impulsive move there. The only impulsive move you have is here. So this would be my point of interest. So as market is selling all the way, all I need to do is now maybe go to smaller time frame and start looking for what? Sell setups. If I do not see a sell setup, or I do not want to trade against the trend because of manipulations, I would wait for this, right? Then when it comes here, it will be my point of interest to buy. In the next video, I think I'll be talking about patience in SMC, how to be very patient in your SMC trading in order for you to be profitable, right? Patience is key. And because of how technical SMC setups are, you want to be really careful in the way you study so that your eyes don't get confused. So pick few pairs and study. Don't over trade, don't over study different pairs so you don't get confused, right? You want to pick few pairs, study, master how your eyes can see it, then you go ahead, right? Of course, you can never be 100% because we are humans and the market itself changes, right? Those patterns may not play out every time, but of course we want to be profitable with time, because most of the times there is repetition. Just like this now, we have market, right, buying off from this region without coming to this level of displacement where there was an impulsive move, right? Then we see a buy off. So this would have been my point of interest. When market is coming to this region, I would have been waiting. Let me do this out. I would have been waiting for market to come here. Then you see market did not come. That would have been a missed entry. Is it because of, oh, it is wrong, market is supposed to come here? If it doesn't come, fine, I've missed that entry for that day. But what happened the next time when the impulsive move was made here? Market still came, right? You can see repeated action. That did not happen here, it happened here. So it means there's something you must be sticked with, right? If I wanted to trade this and market did not come into this level of imbalance, where there's imbalance and where there was an impulsive move, I will not be interested in taking the trade. So to me now, we're like, market missed me. Of course, missed entries happens because the market is not going to play out 100% on your analysis. But you can see here now, market did not just buy off from any region, right? It bought off from any region here, maybe due to lower time frame perspective and of course 50% level to induce buyers. Then all of a sudden, boom, take them out. A kind of manipulation moves you always see, right? Then all of a sudden now, it came for a displacement move that you can buy off, giving another displacement you can buy off. So if you follow these things, so stick to something that repeats itself, not 100% of the time, but at least you get to see it 60, 70, 80%, and you stick to that thing. And I'm telling you, if you can study it throughout your chart, throughout different pairs, you are going to be good, right? You're going to be good, and you're going to be seeing that in every. So we don't want to complicate things, to be doing different things on one looking for SMC setup. We want to be sticking to one particular thing looking for that thing over and over again. Remember, liquidity, market structure, that's what SMC is all about. Liquidity, market structure. Every area of displacement market makes, right? There is an internal range liquidity resting there as a form of imbalance, right? Every swing high and swing low, there's an what external range liquidity resting there. Do not forget. So thank you very much, guys. That will be all for this video, but make sure as you're watching, you are studying. Have time, 2 to 3 hours. You want to backtest. Backtesting is not just, it's just going to the charts to see how price has been reacting based on what you have studied or what Smartech has told you. Okay, Smartech said, oh, displacement. Let me go to the chart and be identifying where market makes impulsive moves. That's how to backtest. You must not be drawing entries and exit price, looking at price. No, you're just looking at how market reacts, right? Based on what you want to see or what you study, right? Look at this impulsive move here. Boom, right? Breaker block. We've talked about that. Market came off, bounced off a breaker block, and boom, continue buying. Impulsive move. So when market is coming, your point of interest, what are you looking at? Where this displacement happen? Where did displacement happen? That's what you're looking at. You're not looking at anywhere the displacement did not happen, right? No displacement. You're not interested in those regions, right? For proper trades. So thank you very much, guys. Thank you for watching.